All right, Brew Crew, welcome back to another episode of the Trade Retrospective. Today I'm going to be talking about the Zoom trade that I put on this week, which began with the 515, 530, 590 call broken wing butterfly on Wednesday morning. After seeing the breakout on Tuesday, I had a plan to target a steady move up towards the 1272 fib extension shown here on the daily, which was around 513. So I thought that if Zoom moved towards that level by the end of the week, then that butterfly will expand very nicely by late Thursday. However, right after I entered on a Wednesday at around 6:35 a.m. Pacific, Zoom actually exploded higher. To see that more clearly, let's look at the 5-minute chart. Within 30 minutes of my entry, Zoom basically reached the long call. Now, given the explosion in volatility, the premiums across the board exploded, and in an effort to cap off upside risk, I rolled the 590 call down to 545 to essentially turn the broken wing butterfly into a balanced butterfly. This adjustment costed me a $5 debit, but I had to do it. I can't just sit and pray that Zoom doesn't run me over, right? And at the time, the adjustment seemed like a good one to make because afterwards, Zoom continued ratcheting higher to 529. And my thought was that if it stayed there or continued higher into the rest of the week, I'd be fine because I no longer have any more upside risk. And I'm still opening myself up to the possibility of this butterfly expanding over the next 2 days if Zoom stayed around 530. Now, a few hours later, at around 9:30 a.m. Pacific, I felt that Zoom had completed its move for the day. So I went ahead and began aggressively collecting back credit by rolling the 545 call up to 560 and taking in a $2.20 credit. Another reason I did this was that even though Zoom is one of those stocks that just does its own thing, the rest of the market was selling off pretty hard, and I thought that it might be harder for the stock to make another leg higher that day. So fast forward to the end of the session at around 11:45 a.m. Pacific, Zoom started gradually selling off. So I rolled that 560 call further up to 600 to again collect as much credit as I could, which at the time was only 65 cents. This reversal in Zoom did cause a lot of the premium in the far out of the money calls to collapse, making it very hard for me to get much credit. But I still had to try because the overall debit of the trade was still pretty high at around $2 at the time. Now, at the end of the day, Zoom closed near the open, leaving a pretty large topping tail on the daily. At this point, I should have made one more adjustment, which I didn't, and I'll get to what that is in a moment. But first, let's talk about the last adjustments that I made on Thursday. So when Zoom opened up on Thursday, I wanted to see if it could claw its way back up to near 510. Right at the open, it was wedging pretty hard, but at around 7:20 a.m. Pacific, the stock just drilled lower, and that pretty much killed all the premium in the out-of-the-money calls. I made one last attempt to collect some credit by rolling the 515 long call up to 525. This brought in an additional 35 cents of credit, but after thinking about it, if I was still holding on to the spread for the possibility of spread expansion into Friday, I actually needed the long call further away from the 530 short calls. So later in the day, I made another adjustment to roll that 525 call down to 520 and incurred a 19-cent debit. That was the last adjustment that I'll ever make on this trade. Unfortunately, Zoom did not ever make it back near 520 on Friday. As you could see, the stock just hung out sideways beneath 500. So the remaining spread expired worthless, and the total debit incurred on this entire trade was $1.99 per spread. So from this trade, I think there were a couple of key lessons. The first is don't underestimate the power of the honey badger. What is a honey badger? Well, it's basically a stock that does its own thing regardless of what the rest of the market does. It's extremely resilient and can pull very powerful moves, and that's what Zoom is. And so when playing Zoom, I have to be very careful about strike selection. Of course, this is hindsight, but I should have either made the fly wider or placed it further away at a safer distance. And if I cannot get it off for a credit, then I should just sit on the sidelines. Had I waited, I actually might have been able to enter later after premium expansion and get off a 25-point wide fly further up for zero cost. Now, of course, I can't predict the future and time my entries perfectly because premiums could have continued to explode higher after entry, but the overall lesson here is that Zoom is a badass honey badger. So I just got to be more careful with that. All right. And the second lesson is that I should have been more aggressive about harvesting more credit after seeing Zoom reverse on Wednesday. Looking back in the quote history for the 515 and 520 calls, I noticed that the 515 call in the last 5 minutes of trading on Wednesday was going for $7.50, while the 520 call was going for $5.50, which meant that if I had just rolled the 515 call up to 520 at that moment, I could have easily harvested back $2 in premium right there, and the trade would be at basically break even, and I'd still have a $10 wide wing in the fly, which isn't really wide, but at least I would still have a long call in front of the shorts, and I would have recovered a significant amount of the debit. And if I needed to adjust on Thursday again, then I would make those adjustments as required. Okay, so that is basically it for this trade. Overall, this was the worst one in the books, but I do think these trades are still good to go over because they're good experiences to have and to learn from in the markets, which constantly evolve, which is why I think doing these trade retros are so important because we should always be striving to improve. All right, but that is it for today. As always, if you have any questions or comments, feel free to leave them down below, and feel free to join us by checking out the links to our Twitter, Discord, and Twitch down in the description below. It's all free. We share our thoughts, trades, setups, entries, exits, all that good stuff, all that good commentary, and all those good vibes. But for now, stay safe, Brewer, and I'll catch you in the next video. Cheers.